Well, good Monday to everybody here. Welcome to our Trading a Smaller Account webcast. I'm Connie Hill. I'm sitting in for Barb Armstrong today. She will be back later in the week. You'll see her. And happy that you've joined me here today. So a warm welcome to each and every one of you. As I look in the chat, I see some familiar faces, and it's just nice to see you there. Last Friday, when we had this class, we were laser focused on doing some debit spreads. We went through 4 of them fairly quickly. We just put them on one after another. And I got some good feedback on that. I understand you liked that approach, just doing the same strategy with each of the, as we went through there, doing them all as debit spreads. Today, we're going to be laser focused again. This time, we're going to be doing it on credit spreads. Okay. So that's what we have to look forward to. We'll also take a peek and see how those trades from Friday are doing and answer a question one of you submitted about that particular class that we had. I am joined in the chat by Mr. Mike Fairborn. I'm happy Mike's here. He's a great friend, very knowledgeable about the markets, everything that we're talking about in this class. He knows like the back of his hand. Okay, so as you have questions, shout them in. I'll keep my eye on the chat, but Mike will help pick up some questions maybe I can't quite get to, or maybe a little bit off topic. He'll help me out there. And I hope you're following both of us on X. I'm Connie Hill CS. He is Mike Fairborn CS, and we'll post educational content on our X account, maybe chart observations that we see during the week. So it's free and easy, so follow along. Let's go through our disclosures and then lay out our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for general information purposes and education. Don't consider it a recommendation. Schwab does not recommend the use of technical analysis as a sole means of investment research. We're going to be using the Paper Money software application. This way you can download to your computer. It's a fabulous tool to practice new strategies in and getting comfortable with the interface. So use that Paper Money account for that. And it's for educational purposes as well. Investing involves risk, including the loss of principal. Now, this class is a little bit different than some of our other classes that we run. This class, we're talking about having a smaller portfolio and maybe limiting what we can do because of that small portfolio in the attempt to build that portfolio up. Okay, so Barb started the year at $20,000. It's much more than that right now. She will not get in a position of more than $5,000 per position and a maximum trade risk of $400 to $500. Okay, so we're keeping the risk pretty tight. That means we're going to focus on short-term trades or intermediate time frame type trades. And we go both bullish and bearish, although this market hitting all-time highs again is not giving us a reason to do anything much bearish. So we've been sticking with these bullish strategies. And as I mentioned, Friday, we focused on long call verticals exclusively. We were just laser focused. And today we're going to be focused on short put verticals right above it. Okay. Those other bearish strategies we'll entertain when we do go bearish, but we really have not had a lot of opportunities to do that. We've had a few times where we could maybe be a little bit more neutral, like with an iron condor. However, not today. We're not going to be doing any of that today. How many of you followed along on Friday with those debit trades? How many of you put them in your Paper Money account? I'm curious to know, because when you do follow along with the trades, it gives you a decent idea of how the trade is progressing, if there's some hiccups that may have come up, and it helps you learn the strategy so much faster. We're going to take a quick look at the markets, and we are going to take a glance at the trades we did Friday and answer a question in there. SPX, so the market started out down today just a little bit. I mean, it wasn't hugely down, but yep, right now, put in another all-time high on the SPX as it just grinds higher and higher. The blue line is a 10-day moving average. This red line is a 30-period moving average. Okay, and they're continuing to go up. And the relative strength indicator, that RSI, is indicating that there's bullish momentum there. Answering my question there are several of you that did put on the trades. Barat, John, D. Womack, Dan tried a few as well. Frank, I put a Newmont on. Okay, so you tried some of them. Good. As you have questions watching them, or as you've been watching them, I know it's only been a couple of days that we've really had with it. Let us know what your comments are. So SPX, new high today. How about the NASDAQ? Yeah, new high again yet today. Russell 2000, it's not hitting a new high today, but it did Friday. Okay, and then our Dow Jones Index, very similar looking candle today as what we saw on Friday. However, not an all-time high, but kind of sitting pretty close to it. So definitely seeing a lot of bullishness. And if we look at the volatility index, and I'm going to give you a little bit longer view on this one. Let's go out, say 9 months here. We can see what it's been doing kind of for most of the year, all right? Kind of year to date had this big spike in April when we had some selling off of the markets, but look more recently, it's just been trading in this little, actually a downward channel is what we're seeing here. So it's getting into low ranges, 14, 15, 18, 16, you know, those kind of levels are not incredibly volatile. Okay. The implication for that means what? Means that maybe there's not a ton of fearfulness in the market. Also means that there is more call buying than put buying, right? Because that's what drives this particular index. Okay. Since I'm new, why did you set your days for 10 and did you say 33? No, I actually said 30. Okay. 30, let's go back to the SPX here real quick to answer this question. The 10 is a good idea of a short-term trend, okay? A 30 is a good idea of an intermediate trend. Many people might use the 30, 40, or 50. So this is the kind of the smaller time frame, you know, it's as opposed to using the 50 at the other end of that range. And it just kind of gives us an idea of what's going on recently in the markets as opposed to longer-term moving averages. And because we're focusing on shorter term and intermediate term opportunities, those are the appropriate moving averages to really be focusing on and using to help us interpret our charts. So great question. Appreciate you asking that. First, let's take a quick look at the trades we put on Friday. Okay, we put on 4 long call verticals. I was hoping for 5, and I actually had 6, but we got through 4 of them. And all of them, I mean, they made some decent progress last week. They're making some decent progress today. Nothing that would say, oh, great, it's going to trigger our order to try to take some profits. One of these is negative, and that's this BKSY. A question came in over the weekend about this particular stock, and somebody said, are the fundamentals important in this kind of a trade that we put on all of these long call verticals? My response was many times, well, let me show you what he was looking at here. He was looking at the fundamentals and he was seeing kind of, that's SPX. Let's get the stock up here. Get the right stock up here. Make sure BKSY. BKSY, all right. It has a little bit of information about what the company does, but the concern that they had was seeing the analysts, what they were saying here was their concern, and, you know, should I pay attention to that necessarily? And my response was, in a shorter term type trade with a stock, it's a lot technically based. And so many times people won't take the time to research the fundamentals of a stock, but when you're putting some money in there and it's going to be there for a period of time, you know, then many times people will take the time to do fundamentals. But none of the trades we did on Friday really warranted that, so we spent 0 time on it. So hopefully that makes sense to you. All right. Do any of them need adjustments? Not really. Even this BKSY. We saw a nice little flag pattern and that it broke out of the flag pattern on Friday. Today it was down here actually below kind of that range a little bit for a little bit of time, but now it's recovering as the market is now kind of shifting more positive. Okay. That's the update on our trades from Friday. All right. Let's take a look at some new possibilities. I said today we'd be laser focused on short put verticals. So those are also bullish. They don't require movement of the stock like our credit spreads do. Typically, we just kind of want them to stay around a level. So let's take a look at this first one that we're going to look at here today. And it is Valero Energy. Okay. It's a oil company. All right. And this is the 10-day moving average. It looks like, it's just kind of bouncing off nicely here. Some might see, oh, look, it had a 2-day pullback, couple of red candles there. And today, market's not closed yet, but if it were closing, then say, I've got to close above the high of the low day or simply a bounce off the 10. So many traders might like that entry signal. So we're going to use this as our first trade example. Come over here to the trade tab, and it's not as widely traded as it has been in previous years. And we are going to be using the October 25 options for all of our trades here today. Why the October 25s? Many times in spreads, traders are looking to sell between 20 to 40 days worth of time. And so sometimes we see that in the weeklies and we take advantage of that. And then sometimes we just we look at the monthlies, and usually the most open interest is going to be in the monthlies, and not always. Sometimes it's a tie between the ones that are expiring this week. Okay. But we can see quite a bit of open interest here in the October options. So the strike I was looking at here earlier, this is my delta column right here. Many times we'll focus on a 30-something delta or a high 20-something delta, or if somebody wants to be more aggressive and have a lower probability and a higher return, they might focus on a 40-something delta. You'll notice that every other one of these has zero open interest. It's because they're brand new. Okay, so we are not going to do anything in those. They'll be gaining more option contracts likely in the future, but we're really going to stick with where the numbers are for today. So let's do it. So we're going to do on this one, I was looking at the 160, which is a 29 delta, and then the 155. Both of those have a lot of open interest. We don't need to be worried that we're a big fish in the pond. Okay, so we're going to say sell vertical, and then we're going to swap this one out for the 155. And I'm going to go ahead and lock that in. That's going to give us about $1.10 credit. It's actually a little bit lower than what I was seeing this morning. So let's make sure it is a good enough or to see if the juice is worth the squeeze of risking basically 390 to gain 110 per contract that we do. Okay, so out comes the calculator here. And let's see, let me there he goes. All right, so we're going to say $1.10 our max theoretical gain divided by our max theoretical loss of 3.9 gives us a return of about 28%. Now, there may be some of you that have rules that say, no, it's got to be above 30, or it's got to be above 40, or 20, or 35, or whatever your magic number is, okay? Some people might use the standard of saying, okay, if it is a return, giving us a return percentage of at least 1% in the number of days that it has remaining before expiration, which is 25, then they might like it. Okay, so this is definitely above 25%. And so we're going to go ahead with it. All right, for our trade purposes here in the class. We can only do one contract in these, okay? Because we do want to keep that risk between $400 to $500. So one at 390, that's all we can do, and that's fine. Don't worry if you're just doing one contract, okay? We are going to set up an order to get out if we get a chunk of it. If we get the majority of that 110, we're going to get ourselves out. So we'll set the order up right now for the spread to be bought back. So let's do a create opposite order. And what would you say is a decent enough chunk of 110? I have a number in mind that I'm going to use right now, and it's going to be 75%. Your number might be different. Okay, so let's say if we get 75% of 110, only 25% is left. And so that's the number we want to use. So we'll say 0.25 times $1.10, going to say 27 cents. We are going to go put this order in to say buy back at 27 cents and make it good till canceled. Now, we also did this on our debit spreads on Friday. We put in an order to buy it back if it goes our way. Now, what if it doesn't go our way? Well, we're going to be managing it. It's one of those trades you want to look at every day, see what's going on. If there's a reversal of trend, you might need to take some action on it. If it's just wiggling around a little bit, maybe not as big of a concern. Our short leg here is 160. And so, a lot of times I like to come in here and I say, okay, where is 160? I like to come draw it in so I have an idea where does it need to stay above. So in this case, we're saying it could go flat, right? We think it's likely to go up. We think it's a bullish entry here. So we're liking it if it goes up. We're liking it if it goes flat. It can even pull back a little bit, right? Because our 160 is there, and we could still have a profitable trade, okay? If it goes down too far, I'm not going to say quite far below the short strike price of 160. If it goes quite lower below that, and it looks like there's a trend change, or maybe some bad news came out, it's really selling off and creating that change of the trend, yeah, then we might come in and either close the trade or change the trade, do an alteration to it, okay? So that's what we're looking at in all of these trades, just staying above that short leg. Let's clean my arrows up here. Oops, get rid of the yellow. There we go. All right, we're going to go ahead. We're going to submit this. I'm just curious if we got a little bit more credit now. It's the same. Okay. We could put in to do a higher credit. It meets our rules. We're just going to go ahead with the trade. We're going to put this in the bucket of trading a smaller account because there might be some times where I fill in for Barb and we can follow up on these trades. All right. She's going to be attending a lot of the workshops. She was out at Dallas over the weekend. I hope we have some people in near Dallas that went. I saw some pictures online. I saw Janelle there. And there was somebody else I saw a picture of as well. I can't remember exactly who that was at the moment. Now, as I look in the chat, looks like we have a survey. Okay. These come on randomly. Okay. Mike doesn't decide. I don't decide when we have a survey, but we really do appreciate your feedback when you give that to us, okay? So I'll just ask you to click on that little link, let it sit in the background. Our class isn't over yet. And then when it's over, go ahead and fill in just really quickly 2 radio buttons, plop, plop on a scale of 1 to 10, what your feeling is. And then if you want to, there's 2 questions that you can answer. And those questions, you can answer them or you can communicate information to me or information I can pass on to Barb. And I like to incorporate some of those comments or questions that come in from the survey. And what might something like that be? It could be, I am struggling with finding the right strike price, or I feel like I'm too late getting into the trade. Okay. It could be an whatever thing you might be struggling with that you would like us to address in an upcoming class. So use that property, okay, or that space to be able to do that. All right. Somebody want to know why Target was down? Yeah, we really probably won't be looking and peeking through the news on Target here today. All right. Let's go to our next one. Next one is, I had fun this morning. There were a lot of things just giving us some decent signals. Riot Platforms. This stock is a small dollar stock, and it's really been taking off. If you wanted to put some money in a smaller account, the $17 stock, so somebody might appreciate being able to do that, right? So that's a possibility. Now, I'm going to zoom in here. You can see it has been trading well above our 10 moving average. And what did it do? Today it just kind of pulled back there. And if we think that 10 has been acting as support, which it kind of looks like it has been, then we might look at this and say, it looks like it might be a bounce off the moving average. maybe it's down at a support level. So some people won't wait for the bounce. They like it to be at support when they want to do a short put vertical. So some might use that as an entry today. We won't be here to see at the end of the day what things really look like. And so some of you may trade towards the end of the day when you have a real firm candle signal, when there's not much time left in the market. But since we can't get together at that time, we're just going to make our decisions now. So let's go look at the trade tab on this. And over 19 million shares traded already today. Okay, so it's a really liquid. We love to see that. It has 50-cent increments, which is nice on a small dollar stock. And let's see here, as far as our deltas go, we've got a 43, a 37, a 32, and then maybe a 27 that might be considerations. The 16, I think, is probably the most obvious. Okay, 32 delta has a 60% chance of the trade going our way. Anything above 60% means probability, it's a higher probability trade. The other thing I want you to notice here is implied volatility that's priced into these options. Would you say that's high? Would you say that's high? Or would you say that's medium? I mean, I'm not even going to throw out low here. Okay. Yeah, this is fairly high. Valero was not that high as far as the implied volatility priced into those options. But on Riot, they are fairly high. That means a couple of things. One, there's expectation for movement, and we've seen this stock moving quite a bit. Even on this short little chart here, this is down at 1083, and today it's exactly right now, it's trading at $17.16. Okay, so it's a mover. That means the price of the option is going to be a little bit pricier. And so some people might say, well, by default, then I'm going to do a credit spread. I'm going to sell some of that premium and bring it into my account right now. Okay. This one, I played around a lot with some of the strike prices here. And we'll see what this looks like right now. It's changed a little bit. Okay. So I love this 3-cent spread. Does that just make you happy? 85 cents by 88 cents. And so let's look at the 16.15 here. And I'm going to do this I'm going to bring this in a little bit different way because some of you might not be exposed to this, okay? If I just say sell vertical, it's just going to grab the next strike price in sequence, right? It's just going to, let me get rid of that. It's just going to grab, I start on the 16, it's going to grab the 15.50. Really, there's some good volume here today, but we're going to go for the 16. Okay, we're going to spread it out by a buck. That's the spread we're looking for. So to get it to skip over, say the 15.50 strike price, we can say sell deep and wide, and then I'm going to go 1 month out, so we'll stay in the month, and 2 strikes in a vertical. That's just another way to get a 16.15 to populate here, just by entering it that way, deep and wide. So that might be something new some of you haven't seen before. They're like, oh, that's kind of cool, because maybe you like to spread yours out a little bit. 35 cents. What do you think of the credit on that? 35 cents. As far as a max gain, we'd be risking 65 cents to gain 35 cents. I think that's a decent amount. Let's see if the juice is worth the squeeze. Okay, so if we say we'll go 1 minus 35, that gives us our 65. Okay, so if we have our 35 divided by our 65, that's a juicy 53% return. Okay, now some of you might go, ooh, maybe we should back off a little more. Maybe what if we looked at this one, the 15.14, right? Maybe there's enough open interest there, or enough premium there rather. And it could be because these has a lot of premiums in them, and the probability is going to be higher if we go a little bit further out of the money. Okay, so just for fun, we're going to line up, we're going to do blast all, we're going to do a 15.14 now. Okay, so we're going to say sell, and then we're going to do the deep and wide again. For those of you that maybe blinked and didn't see it, 1 month, 2 strikes, vertical. And now here's our 1514. Okay. I'm going to lock it in place as well. A 21-cent credit. So I'm going to say it's significantly less, but for some of you, it might meet your rules better. Okay. It just might. There might be some of you that are okay if you're trading like 1 or 2 contracts and you're okay with the kind of the volume that's coming in here today on these newer half point strike prices. Okay, so some of you might be okay there. We're going to stick with liquidity here. So if we have 21 cents divided by what? 79 cents, that's going to give us a 26% return. So going back to our rule, as far as how many days do these options have before they expire, they have 25 days. So if it's more than 1% a day, that might meet some of your rules. For this one, we're going to keep with the one that has a 60% probability of working out, but really pays us handsomely. Okay, so that's the one that we're going to use. So this was just to do a quick comparison because I know there will be some of you that were thinking, well, what if we do go a little further out? And that kind of answers that question. Okay, let's say here, we're going to change this to a first trigger sequential, and we're again going to put in an order to buy it back. If we're risking 65 cents, how many contracts can we do in this account if we're willing to risk 500 bucks? So let's go 500, divide that by our $65 per contract. We can actually do 7 contracts on this one, okay, and still meet our risk. And part of that is because it's a dollar-wide spread, and the credit itself is actually quite small. They're kind of a little bit opposite of what we just did with Valero in that sense. Okay, so I think that said 6 contracts. We're going to do 6 contracts here. We'll keep our first trigger sequential. And then have you decided for yourself what percent gain makes you happy? Okay. Some of you have told me in the past 50%. Some have said 60 or 70%. This is actually, I'm going to say, pretty juicy. So maybe we can afford to not be as greedy on it. Not that you wake up in the day and you say, I'm going to be really greedy on my trades today, but just the idea that we might say, yeah, let's not try to suck everything out of it because that's really hard to do. So what if we grab Mr. Calculator here? What if we say if we get 60% of this one? Then 40% would be left. Would you be happy with that? If you would, great. If not, you use your number. I like to use some different numbers in our classes. Okay, so on this one, let's go 35%. We're going to go times 0.4 because if we captured 60, 40% is left. So that says we'd buy it back at about 14 cents. So we're going to plug it in. Again, your number might be different numbers that you're comfortable with. And so, you know, experimenting in paper money allows you to develop that comfort to be able to do that. Okay, let's go ahead. We're going to put it into our trading a smaller account bucket. We're going to send it on its way. Getting some feedback from some of you. Chris says 80%, but may close with less if trend starts to change. So you might go, I'm not getting all of it. I'm not getting 80%, but it's at 60% and it's changing, so I'll take the 60%. Yeah, that's Chris's approach. Jill likes 80%. Yeah. How do you change the column to get the probability? Jim wants to know. Basically, I put in the columns that I like to see here. I use this column set on most of my classes. What you do, come up here to where it says, well, yours might look different, okay? Mine is saying the names of the columns that we're looking at. And so what you'd come down here, you'd just say customize column set. And then it brings up what's currently there, which on mine, those are the ones that were currently there. But initially, I think you might have started out with the Greeks because I've got delta on top, and I think I took away the rest of the Greeks, but left delta. And then over here on the left, you can type in what you're looking for, right? Open interest, right? OPE brings you up the open interest. You can bring that over. Okay, so very helpful. When you do that, do a save as so you don't have to go recreate it again. All right. On mine, I actually just keep the column name. I'm not going to save this again, okay? But I like, because I have different column structures, there might be 3 I rotate around with. Okay, very good. Troy says this example is for short put verticals, correct? Yes, today we are being laser focused on short put verticals. All right. If you are somebody that likes to do long verticals, last Friday we were laser focused on the long verticals. Let's go out here real quick. If you're a Trader Talk subscriber, it makes it so much easier to find our stuff, okay? When we're teaching, what we taught. Down in the bottom right-hand corner is that little blue icon that looks like YouTube, and it's in blue that says subscribe. So you click on it, great. You can see our stuff pretty quickly here. And so here are some of the content that we have, but if you want something specific for a class, do that playlist, and then you can come down and find the class you're interested in. I'm trying to find this one. I think it might be near, since we did a trade on it Friday, it's down a little bit lower. So here's what we did Friday, trading a smaller account. We did 4 debit spread trades, all risking $200 or less. Okay, so we're super focused on that. All right, very good. You guys have got it. Perfect. All right, next stock up. I'm hoping we can do all the trades I have here today. Next one up. This used to be a meme stock, not as much so lately. GameStop. That sounds familiar. And the other thing I wanted to mention is I have a month's worth of looking ahead so that we could see if any earnings dates are coming up soon. None of the examples that we're using today have earnings coming up in the next 4 weeks. Okay, so that's kind of helpful for us, right? We're like, okay, maybe there won't be surprises around the corner. Now on GameStop, look what we've got here, you guys. We have a nice flagpole. We have the consolidation of the flag. And what do we have today? We have the breakout of the flag. That's what many traders like to see for a bullish entry on a flag pattern. Now, many times we'll take the height of that flagpole and duplicate it and say, all right, we're going to say the target is either up here about where the top of that line is, 28 and change, because I put it next to the bottom of the flag, or you can put it out in the breakout area where your stock sees where the breakout occurs. You could put it there. If you were doing a swing trade, you might use something like that as your target area. But again, we're just going to go with percentages. Okay. But yeah, absolutely. When we're looking at different stocks, it doesn't mean this is the only trade you have that you should do with it. Not that at all. Okay. Not even close. Now, implied volatility, you guys said and noted, yeah, it was super high implied volatility for that Riot stock. What do you think about GameStop? I'm going to say it's in a higher range as well. Not quite as high as Riot, but this is nice volatility. That means the options should be a little juicier for selling short put spreads. Let's see what kind of strike prices we are going to look with right here. Again, my delta column, we've got a 43, a 38, a 33, a 28 delta that we could consider. But some of them just barely came on, so they don't have the open interest. So we're going to focus on the 26.25. Okay, so we're going to say sell deep and wide, 1 month, strike 2, vertical, to skip that 0.5 strike price and just go directly to the 25. 38 cents. Whoa, is that juicy? Yeah, that's pretty juicy. Ooh, it got up to 39 cents here. Ooh, juicy, juicy. Now, I will tell you, I experimented a little bit with this. I said, well, what if we go to the 25 strike price, do 25.24? It's a little bit higher probability of success on the trade at 67. I think it's changed enough. We might decide to do that because if we have a roll we like 60 or higher on the probability, Somebody might favor doing that. So instead of this one, let's change up. Let's go 25, 24 and see if it's worth it, if it gives us a good enough return. So we'll do sell. Let's get on the right thing. Sell, deep and wide, 1 month, 2 strikes, vertical. So now, oh, it did the same one. Did I start in the wrong place? Okay, I'm going to just manually do this. We're going to go 25, 24. Okay, a 24-cent credit. Okay, significantly different, isn't it? And so you can choose, do you want more probability or do you want more premium? And both of them have lots of open interest so that you don't have to worry about it. Narrow bid-ask spreads. Paul says, today's volume will be added to the open interest tomorrow. Yeah. First thing in the morning, volume starts again at 0. And the balance of contracts that are out there. Now, we don't know that absolutely all 576 are still going to be there. Maybe there's some day trades or whatever. But it gives us an idea of what would be coming in. This one's 23 today. This one's 140 today. Or right, I shouldn't say today, but right now at this moment. Okay. Do you have a preference? If you have a preference of top trade versus bottom trade, tell me in the chat. Top trade is 39, bottom trade is 25. I'm going to dig out the calculator. So let's go 0.25 divided by 0.75, our max gain divided by our max theoretical loss, 33%. 33% return on something here that's about a 68% probability of expiring out of the money. Okay, now most of you that have chatted in right now have said top, 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 top. Lola's the first one to say bottom. Hava says the top. Sometimes I'm really democratic in our class and I'll go with what you guys think. But you know what? I'm going to change on this one. We're going to go with the 25, 24. The reason being, we still get the return we're looking for. Typically, it's higher than the number of days left in the spread. 33%. The big thing that maybe was the kicker for me is liking the higher probability of expiring out of the money. Here at 68 as opposed to 58. However, if you said top, that doesn't mean you shouldn't paper trade it. It doesn't mean you picked the wrong one. It doesn't mean anything. It's just your personal preference, right? You're like, I kind of want to bring in that premium. I don't like that. Yeah, there's nothing wrong with that at all. But I will delete that first trade. We're going to go with a 33% return. So how many contracts can we do? We can go to our $500, divide that by what? That should be $74 per contract. We can do 6 of them. So we're going to, okay? Bring this up to 6. Instead of doing a blast all, we'll do first trigger sequential. We're going to create an opposite order here. Which chunk should we use on this one? What chunk would you feel comfortable with? Would you feel comfortable at 60%, 50%, 70%, 75%? We're using a bunch of different numbers here today. Let's calculate it out. This one I'm going to go with 70%. If we get 70% of it, let's go buy it back. Okay, so 0.24 times 0.3, because 0.3 is what's left after we get 70%. Only 30% is left. This says go buy it back at 7 cents. Now, there will be some of you that are tempted to say, well, I would just like it to sit there. And if it's going, the trade's going my way, I just want it to not even trade to get out. I would prefer not to even buy it back at all. And that could be a real possibility for some of you, especially if the stock moved really big. But if it's close, some of you might not feel so comfortable there. Okay. All right, we're going to hit confirm and send. We're going to put this in our trading a smaller account bucket on that one. Servina says, what about stop orders on these trades? It's a great question. On a stop order, because it's a hedged trade, some people don't want to put in an automated exit. They don't want to get out on that downside, but you could. You could if you wanted to. Okay. What you would do instead, let's just put this trade up here again. Let's go sell the 25, sell deep and wide, 1x2 vertical. So we'll bring it back up here. You could do here a first triggers OCO, and then you could create the opposite order here like we did with this one and said, okay, we're going to get out at 7 cents, and then create another opposite order. And on this one, you'd give the conditions, right? You'd give the conditions when you would need to be out. You could be out here. You could say, well, let's make it a market order, and let's make it be based on the price of the stock. Let's let it be based on, some people might do this, you don't have to. If the price drops down at the flag area, that could be something you plug in there, right? If we did it based on that, we might say if it gets down to, let's go 25.58. Okay, if it goes down to 25.58 or lower, I think that's the right way actually, 25.58. And let's make sure is less than or equal to 25.58. If it goes there based on the price of the stock, then do a market order. And then both of these orders you'd make GTC. Okay, that's how you could do that if you wanted to. Okay, many times we'll just look at a profit target because we want to remain flexible, because maybe if it does, like on put verticals, if it does start a new trend, it starts going, making a lower low or something, we might decide to buy back the short put and keep the long put and let the long put make up some of that money that we lost by buying the short put back at a negative amount. Okay. In fact, I did that on one of our trades for one of my other classes. I'll just show you real quick. It was on DHI. Was not doing so well. It was a short put vertical. And it has 25 days. So we went in, just bought back that short put on this one. And we were noting what the loss was, what we paid for it to buy it back. And then we're hoping that this price goes up even more than where it is right now. We're hoping it really drops, that it can pay off that deficit. So that's one reason why traders might not put in that opposite order to get out under those conditions. Make sense? All right. Let's see. Can I create a sequential trade afterwards? Yes, you absolutely can put in. Yeah, you can go after you've put in the position, just do a right mouse click on it, say create closing order. You could put in a stop, you could put in an OCO, you could put in whatever you want. Okay, absolutely you can. Let's see if there were any other questions here to answer. Can I, yeah, Tammy says, sometimes we do a first triggers order and sometimes we do an OCO order. Are there rules to use which? There really aren't rules. It's more of a preference. And sometimes I will put in different things just to show you that you could do it one way. You don't always have to do it the same way every time. Give you an opportunity if there's, you paper trade and you're kind of like, I like to do it this way. Yeah, great. You can continue to do it that way. You could have a target on the good side, a target on the bad side if you wanted to get out. Okay, so absolutely experiment, see what's comfortable for you, and it may vary per trade. You may start doing one and then decide you like it and do it on the rest of them, or you may say, I guess I played with it, but I'm not so sure now. Okay. Well, you kept us very busy here today in our webcast, which I appreciate. We love it when we get your questions. Okay, Mike, thank you for helping me out in the chat. As just a farewell ask, if you'll fill that survey out for us, we will read every single word that you write. If there's information you want me to pass on to Barb, I'll pass it on to Barb. If there's information for me, because maybe I'll follow up with some of these trades in our short verticals classes. They are short verticals. We could do a follow-up in that particular class of those particular trades. All right, you guys, take a little break, get a refresh of your beverage and a treat. And then at the top of the hour, we're going to have the privilege of hearing from Mr. James Boyd, Trading with Technical Indicators. Mike, thanks so much for your help and have a great day, everybody. Bye-bye.